Which is more dangerous, credit card debt or IRS debt? Okay. The answer may surprise you. And to be honest, there's a couple different ways of answering this question. The first way is strictly looking at it from a mathematical perspective. Is it more expensive to owe the IRS $10,000, or is it more expensive to owe $10,000 on your credit card? Okay. Now, obviously, this is kind of going to depend on what credit card you have. Credit cards have different APRs, different interest rates. Those aren't exactly equivalent terms, but for purposes of this video, let's call them the same thing. If you read your cardholder agreement for your credit card, unless you're in some 0% introductory APR period or something like that, your credit card debt, you're paying north of 15% interest on it, probably over 20% interest on it, right? Depending on the credit card on your balance. Now let's compare that to IRS debt. IRS debt, how expensive is IRS debt, to hold IRS debt? Well, it's a combination of not only the IRS interest rate on the debt, which is 7% right now, and that can change every quarter, but it's also the failure to pay penalty if that's still running on your debt, which is typically 0.5% a month of your balance, right? So in very simple terms, 0.5% a month failure to pay penalty times 12 months is about 6% penalty rate a month, plus the 7% interest rate. And again, it's higher than that because the interest is compounded daily on the balance, existing interest, and the penalties. But you take that 6% penalty rate and that 7% interest rate, IRS debt's at about 13%. Okay, a little bit higher, yes, because the interest is compounded daily. So, in generally speaking, IRS debt is actually cheaper than credit card debt, right? This is why it's not always the smartest thing. I mean, it can make sense in some circumstances, but it's not always a no-brainer just to, pay a bunch of IRS debt with your credit card, right? Because you're probably going to be paying more expensive money with the credit card debt than the IRS debt. Okay, so that's one way to look at it. The other way to look at it is which is riskier, which has more of a chance of turning your life upside down. Okay, who has more collections power against you? And when it comes to this, it's clearly the IRS. Okay, the IRS doesn't have to go through the court system to garnish your wages, levy your bank account, seize your car, right? It can just do those things. Your credit card company, on the other hand, yes, it can hurt your credit score, right? Yes, they can send your debt to collections or something like this, but in general, they're not going to be able to access your assets as easily and as quickly as the IRS can, okay? Two different ways to answer the question. What do you think? Let me know in the comments.